Okay, folks, welcome to Thursday Night Stock Charts Live. Just Mr. G, I just saw your comment. Thursday already, yes. I can't believe it either. Goes by like this. Goes by like this. All right, for those that are new, what we do here is first we talk about the day's events, economic data, some headlines that are interesting that could influence the market, that have influenced the market. And then, of course, the topic du jour each Thursday night is we review the weekly charts. How are we setting up to close the week? Are we looking bullish? Are we looking bearish? Are we neutral? We're going to talk about that because Thursday night is when we begin to strategize for next week. But the one thing I always like to say, while we're going to be reviewing the weekly charts, we have one trading day left to go. And we've seen time after time that one trading day can make a big difference. We review again on Saturday with members on the week ahead commentary, the closing price action of the stock market. So let's begin with economic data. And we had CPI come out yesterday, both at the headline level and the core level, core being X food and energy. As expected, no great shock. Federal budget, who cares? There's no such thing as a federal budget. Initial jobless claims today, less worse than what was expected. Some will say it was a good number. I think it was a horrible number. 712,000 people filed for unemployment benefits. That's horrible. But the market took the lower than expected number, which was 725,000 jobless claims, and they ran with it. Also today, it's not on here, we had a 30-year bond auction. We had a 10-year yesterday, a 30-year today. I believe they occur once per month. And for the most part, there were no surprises. There were enough buyers for the government to sell off that debt. And that's what really goosed the market today, in particular, the small caps. Some of the markets faded a bit on the day, but the small caps, extraordinarily strong. Of course they are, because I'm short. So why not? So we'll talk about bonds, how they're trading at current, and why tomorrow may be a little bit of a surprise for the market. If we get a follow through to the downside tonight in the overnight session in the bond market. So before we go to that chart, yields. We had a solid auction today. No great shock. What was it, $38 billion in debt? I think Biden is or has signed off on $1.9 trillion, and there's more coming. This is just the beginning. This is never going to end. Here's the budget deficit. I mean, completely out of control. And this is only going to get worse. This out of JP Morgan, and this is before the auction today. But they said that they expected today's auction to go off well, which it did. But moving forward, they're worried about demand for the debt. And events that happened like during the last bond auction, the 10-year bond auction, not yesterday, but the prior one, where we saw a spike in yields, which caused the sell-off in the stock market, that may become more frequent. So beware of these treasury auctions moving forward. We're issuing more and more debt, and think of it this way. You know, in your FICO score, your credit score, if you have too much debt, well, it's harder for you to get a teaser rate loan because you're too much of a credit risk. So the United States, which is just beginning to really pound out more stimmy checks, the globe is going to look at us and say, we got to get paid more for our risk here. So the pressure is to the upside on yields longer term. Yes, we took a week off, but the trend is clear and defined. So we're going to go over a chart of yields in a moment. But first, what I want to point out, after having this conversation with regards to the bond market, now bonds initially, bond yields sold off, and then they began to rally. What happened to bond prices? This is the 10-year yield 1-hour chart. And focus in here. We broke out on the 10th, put in a higher low, rallied. Then we double topped out, broke down to a new lower low, then a lower high. Then we broke support. We have a head and shoulders setup. Left shoulder, head, right shoulder. Now, keep in mind, this is only a 1-hour chart. Very volatile. So, by no stretch of the imagination, does this mean we're going to see a stock market sell-off? But if we begin to break back down below this support level here in green, then things could get pretty hairy tomorrow if we open up with yields spiking up higher. So we'll keep an eye on this overnight. Perhaps this is just a breakout and a pullback of the retest. That would be a very healthy event, but we've already had the retest. So warning flag on the track here. We may just be setting up for a higher low, but keep a close eye on the bond market. Let's get to the weekly charts. Let me first say hello. Big Bear, hello. MacArthur, I don't know about you, Bob and Big Bear, but we eat plenty of fried chicken here in the South. Dinner was good tonight, fellas. Good for you. Love it. Falcon, hey, brother. Larry, my favorite Bidenism. If I do everything right, there's still a 30% chance that we're going to get it wrong. That's great. That's great. All right, let's go to the weekly charts. All right. So, fried chicken's the key to analysis. I agree, man. I didn't think of it that way as a northerner, but I defer to you. JW, RTY is ridiculous. Yeah, you're not kidding. It's crazy. I'm going to go to a monthly chart in a moment. All right, let's talk about, this is actually a monthly chart. We go over this every single week. The yield curve just keeps going higher. Steepening yield curve. Bearish for stocks. Stocks just don't care right now. They just don't care. So short-term, long-term yields going in the right direction, up. And the stock market buckled last week, but has since rebounded. The TLT, the 20-year bond ETF, looks like we're bottoming out here. This is a weekly chart. And we may get a rally. Now, if we close down below 137.50, we're going down to 136.45. So keep an eye on the TLT, because if it's dropping, this is a daily chart. If it's dropping, that means yields are moving up higher. Now, the TLT did break out on a daily time frame. We have pulled back. We're retesting the breakout point at current. We should hold it. If we don't, look out below, because that means yields are moving up higher. Now, here is the 10-year yield. Here's the pimp Mac Daddy of them all. Weekly chart. And we are down on the week. Not much. We are still extended here. But I think that before we get a major correction on yields, I think we're coming up here to 1.72. Now remember, we hit 1.6 last week, and the markets just rolled over. So what happens from here? Not quite sure. What happens up at 1.7? It's probably not going to be wonderful if we just shoot straight up to it. So we've seen before where on Thursday nights we have a down bond yield, but on Friday close, it's up. So beware. The trend is still very strong here on the 10-year yield. And we're hitting that danger zone of where stocks just don't like bonds being this high in yield. And you're seeing tech still hasn't recovered. While the short, small caps have rallied to all-time highs, tech is still lagging. So tech is susceptible, especially to rising yields. Tips, bullish key reversal bar. Good looking chart here. We may have put in a higher low and perhaps setting the stage for another rally up higher. Light volume so far in the week, but one trading day left to go. We'll see. The US dollar, very bearish week. I mean, really, really bearish. Bearish key reversal bar. We hit 92.50. I mean, if yields pull back along with the dollar, you're going to see gold rip, silver rip. The VIX, just, I don't know how to put it. I mean, it's just a mess. Big bearish reversal bar. We broke down below technically 4 support levels, perhaps 5. Very, very weak here. Daily chart. I warned about these Stokes the other day, weak and getting weaker with the lower highs. We hit a low of 1969 in February. We bounced off a support today. I don't know. I was asked, would I buy VIX contracts going out into June right now? Still no. Dow Transports, weekly chart. Beautiful chart. Up nearly 3% on the week. We're trading above the 2 standard deviation Bollinger Band, pretty extended. With RSI now at 72.36. Volume is going to trend in light. Stokes are very extended here. Let's go to a daily chart. Very light up volume. So the transports, pardon the pun, and the pun is intended, the transports are running on fumes. Dun-dun-dun. Hit the like button for that, please. Or the dislike button, whatever, doesn't matter. So transports maybe getting a little bit too extended here, setting up for a pullback. The Dow Jones Industrial Average, order week, up over 3%. This is your value plays rallying. Volume is trending about on par with the moving average. MACD looks good here. Dow Jones looking good. I usually don't spend much time on the Dow. Oh, this is very extended. We're probably going to pull back here in the next couple of days. We're leaning into the 3rd standard deviation Bollinger Band. Volume's dropping off sequentially. But I don't expect a big correction there. S&P 500, what a rebound. We're up 2.5% on the week. New highs this week. Volume is probably going to roll in about average. Daily chart. That's the wrong chart. You know, this is very similar price actions to what we're seeing on the small caps, in that every day we wake up, we gap up higher and higher and higher. And what that leads me to believe is that a lot of what you're seeing at the open are the bright green futures and shorts getting squeezed. And yes, given the volume, we have seen some institutional buying, but that's dropping off now. We saw a bit of a fade on the day today. Not too much. Small caps. All right, I'm short of the small caps for disclosure purposes. We hit new all-time highs this week. So making that disclosure does not make me happy. But man, we are extended here. This is a monthly chart of the small caps. We are so extended beyond the 48-week moving average or month moving average that it's never been seen before. So usually the adage I use is this is unsustainable, and that's one of the reasons why we're short the small caps. Weekly chart. Now, on a weekly time frame, let's drill down here. We busted out again today above this is the uptrend channel going back many years, and we are back above, well above, the upper band of resistance. So this is a very powerful chart. And I was asked about what would make me bullish to buy the IWM around these numbers. I can't. Not knowing how the monthly chart looks and the weekly chart looks. The daily chart, this is very consistent with a short covering rally. The only thing that I don't have on my side is the fact that volume is very high. So there are some institutions buying up the small caps. I can't pawn this off on short covering. Not all of it anyway. I would like to, but I can't. There's been no backing and filling at all this week. At all. Every dip being bought. The Tues weekly chart. Bullish key reversal bar. Stokes is still weak. What I'm looking for here, and this goes for most of the beta names, your Teslas, Neos, we're trying to break out on a daily time frame. I would like to see a pullback and a higher low. That would have me stepping in and buying some Qs or the underlying issues. I mean, even if you look at Tesla, I really didn't see how it closed today. You know, nice rally, but we'd really like to see a pullback and a higher low, open up a long position, add more on a breakout above this pivot point. Right now, to buy here is we're hoping. We're hoping we're going to continue up higher, and to me, hope is not a strategy. So that's why I haven't been buying this rally this week. I may regret it, or I may be patting myself on the back next week. Who knows? The banks, weekly chart up over 2%. They're benefiting from rising yields. Hey, John. Support for the Qs. $300. You want to be specific, 297, but 300 to round it off. Another support level, 306.50 is interesting. Back to the banks. Again, up 2.11% on volume. Very, very good volume here. So the banks look really good. Daily chart. They were down today. Slightly. Very light down volume. So you can see how the banks are responding to rising yields, or actually, sorry, a pullback in yields. They do well when you have rising yields. So the pullback this week is muting the price performance, but overall still a very good looking chart. Technology, bullish key reversal bar. Volume is going to roll in above average. assuming we close up on the week. Daily chart. You know, arguably, maybe not so arguably, we broke out today. No, we did not. We closed right at resistance. Well, yeah, I think you could make that argument. But and the question was from John Spencer, rotation from IWM back into growth coming. Yeah, I could see it because the small caps are now so very extended. But I think that to make that happen, you need to see a pullback in yields because the cues are so tech laden. I mean, there's no energy in tech. And energy is leading the way right now, along with the transports and industrials and small caps. So I think you need to see a pullback in yields. And at the same time, a pullback in the small caps, and then you get your rotation into the cues. Manny, hello? JW, NQ monthly thoughts. Are we starting to roll over? NQ. You talking about the NASDAQ? Because that symbol's not coming up for me. I think you may mean the NASDAQ. Just confirm that. Manny. So QQQ puts or IWM puts good as hedge? Yeah, I would probably be more bearish right now on the small caps because they're so extended. But yeah, I mean, if you're long of the Qs and you want to hedge, sure. That's the purpose of options anyway, is to hedge your portfolio. So, yeah, I have no problem with that. You know, if we start breaking out to new higher highs on the tech names, then those I wouldn't be hedging. I would just enjoy clear blue skies because you have no overhead supply. Especially if yields pull back, I wouldn't worry about having put options. But if yields continue up higher and for whatever reason tech continues higher, you're darn right I'd have puts on that position. Yeah, the Nasdaq, that's what I figured. Monthly time frame you were saying? All right, I'm just reading comments here. I'm going to get to those comments in a moment. The NASDAQ composite, I think you bring up a valid point. It's a monthly chart. Excuse me. My voice is still horrible. It's a monthly chart. And what would have closed out the month right here, right now? This would be a hangman formation. Now, we have what, 12 days left to go of trade in the month. So a lot can happen here. I would continue to look at yields. This is how granular I would get. Now, up top here, you could see that yields and the NASDAQ composite have an 89% correlation. Right? So this run up in yields had little to no effect on the NASDAQ composite. But we've hit such a point on the 10-year yield that it's now detrimental to the technology names. And you're beginning to see the correlation begin to peak out. And I'm not going to be the least bit surprised to see this roll over, just as it did back here, back here, back here, back here, back here. The stocks and yields can rise together until a certain point, and at that time, it breaks. So watch the 10-year yield. If we continue up higher here gradually, tech may be fine. But if we just shoot up to that 1.72 mark this week, 2 weeks from now, who knows, whenever, that may be a problem for the NASDAQ, and this could weaken up real quick. So just beware. You're welcome, man. And since I have this up, I want to save this chart. Yeah, yields and the small caps remain correlated. They're 77% of the time, but they're rising in tandem. The small caps right now, they have less of a they have a higher tolerance at current for yields. Why? I'm not sure, to be honest with you, because these are small caps. They have to go look for funding. That cost of funding is rising. So I'm not getting why there isn't more of a reaction by the small caps to these rising yields, but it is what it is. And I hate that saying, it is what it is. Falcon, Bob, I'm still in BC since 85. Just thinking if I should keep it or sell BC. Brunswick Corp. You know, looking at a monthly chart, I mean, we're extended, but that doesn't mean it can't move up higher. I like these Stokes. I like them. They're hooking up. This is a very, very strong chart. RSI powering higher. I like it, Falcon. I like it. Let's check out the daily chart. All right. So what's your goal, right? If your goal is to scalp a trade, then it's probably time to head to the exit door and look for a pullback. But if it's an investment, I think that longer term, you're probably going to head up higher, given the monthly chart, given the weekly chart. But at current, we're very extended relative to the third standard deviation Bollinger Band. But all we need to do is trade sideways with a bias to the downside for a couple of days, and then it can resume this uptrend. So it really all depends upon your outlook, what your goal is. Me personally, if I was swing trading it for a short-term scalp, I'd probably be booking some profits at the very least using a trailing stop-loss order. And if they gap it up higher, they sell it off, at least you're getting taken out by the market using a wise move, using a trailing stop-loss order. So that's an idea you may want to think about. John Spencer, interesting. What type of trigger? Falling dollar? Trigger for what? Just go back to. Just remind me, and I'll expand more. And I'll wait for your reply, and I will continue here. The semis, bullish reversal bar on the week. Very, very good volume here. Very good volume. Daily chart. We recaptured support. What type of trigger? I just think that it's the rising debt and a normalization of yields. You know, think about it. If you're a bank and you're underwriting a loan to the United States right now, we have $1 trillion in the Treasury, 1.9 trillion that was just put into, or going to be signed off by Biden. It's already passed Congress. You go for another round of what? $1 trillion. They just throw $1 trillion around like it's nothing nowadays. So, you know, if you're an investor that's out there and you're saying, Jesus Christ, these guys just keep pumping out more and more debt. I got to get paid more for my risk. The only saving grace that we have is that we're not at zero rates and we're the least dirty shirt in the bin. And that's the only thing that's keeping a lid on rates right here, right now. I feel like biotech healthcare sector follows CRISPR's. What has the most influence on yields now that we're through the auctions? What's going to have the most influence on the yields is the economic data moving forward. If you start to see GDP come in with a 3 handle, God forbid a 4 handle, you know, God forbid in a good way, you're going to see yields spike. So it's all about the overheating of the economy. Because what the bond market's going to do is they're going to front run the Fed. They're going to say, okay, GDP was expected at 2.5, now it came in at 3. I'm using crazy numbers here. So what's that going to do to yields? They're going to demand more. They're going to front run the Fed. They're going to sell bonds. Yields are going to spike up higher because there's going to be an anticipation. Despite what Powell said last week, there's going to be an anticipation that the Federal Reserve is going to have to raise rates. So the key catalyst that will drive yields up higher, watch the next GDP report. That can influence the market. Watch tomorrow's PPI number, the Producer Price Index. If that comes in hot, meaning higher producer price increases, that's going to get passed along to the consumer at some point. That could jack up rates. So those are the events that could fuel higher yields. Now, why is the stock market rallying right now? The stock market's rallying right now because states are opening. Texas, Florida, Alabama or Mississippi, one of the two. They're all opening up. And 100% opening up. So what does that mean? It means pent-up demand gets released. So that is going to be economically stimulative. What does that mean? Higher GDP, more transactions, probably a weaker dollar because inflation is going to rear its ugly head. You're welcome, Falcon. An anticipation like the stimulus being forced into the market before they're sent out. Yeah, MacArthur, I'm glad you said that, and that's what we're trying to do here. We're trying to anticipate the market. You know, if you log on to CNBC and you watch a video, they're going to tell you what happened. We're trying to tell you what the charts are telling us, and the charts are telling us that equities are very extended. That doesn't mean they're not going to go up higher because of optimism. The problem is that those sectors which have been very, very hot, technology, they're going to be the first to feel the pinch of rising interest rates. So it's a double-edged sword, the economy opening up. So we're trying to look ahead. That's all. Biotech's looking very good here. Bullish reversal bar, very good week. Up 17.5%. This is a leveraged ETF, LABU. Very nice week. What does it look like on a daily chart? Nice rally. Like to see a higher low get put in. Good volume. Very nice. Consumer discretionaries weekly chart. Big week, up over 6%. Volume, very high. Stokes are pretty weak. Energy, certainly a leader of late. A little bit of a laggard this week because it was strong throughout that sell-off in tech. Now it's taking a rest, consolidating at resistance. Good volume. Good. What did we do today? A little bit of a fade here on the day. Very light volume to the upside. We may see some pressure on energy. A little bit of selling. Oil, totally inflationary. The Federal Reserve backs it out of the CPI data. They go to make the core look more favorable. But I don't. I mean, this is inflationary. If you think about the number of goods that oil goes into, it's astounding. It goes into everything for the most part. So the fact that oil continues to rise and probably going to break out higher, this is a very bullish chart. Volume is going to roll in, maybe a little bit below average, but good enough. Stokes strong, RSI strong. What do we do today? We broke out. Very strong chart. Gold. All right, so I had a price target of between 1640 and 1650 on gold. It doesn't look like I'm going to get it. One trading day left to go, though. So far this week, we have a bullish reversal bar. The one thing that bothered me today about gold is that you had bonds. We had a good bond auction. The dollar sold off really hard. Yet gold, it just couldn't hold its mud. So I think we need to see a pullback here, maybe a retest of 1700 on gold. The gold miners, of which we are long, bullish key reversal bar, we're at resistance. Volume is very light this week. Here's my little gold company, gold money. We'll skip this. Up week. My silver miners, SILJ, big bullish reversal bar. We had broken down below support last week. This week, beautiful week. Very nice. What do we do today? Nice move up higher. I don't like the volume. Horrible volume. Silver, inside weak, no new high, no new low. What's volume like? Very light. I'm not going to like the daily chart. Nope. It was down today. It did reverse off the lows, holding 46. Very light down volume. Not too bad. Not too bad. All right, let's take some JA. The dollar is not looking good on a weekly time frame. So, yeah, probably. Keep in mind that we continue to print dollars, and roughly 25% of all dollars in existence right here, right now, were printed within the past 12 months. So we're diluting the dollar day after day after day, besides what inflation is going to do. So, yeah, it's a problem. Eric, hello. You're welcome. All right, let's go to some chart requests. We have 15 minutes to go. Folks, we'll be using TrendSpider automated technical analysis. Speed up your technical analysis and use their automated trend line functionality. Saves you a lot of time, and a lot of people are subscribing to this. So get ahead of your competition and use their alerts. I use them all the time. In fact, I had PayPal fire off today. GE got hammered. So we'll take a look at those charts in a moment. But they're offering a 30% 3-year anniversary discount. Use my link below. You get 35% off. So TrendSpider, take advantage of them. Let's go to GE really quick. GE just was annihilated today. I'm not sure if there was news on this or not, but absolutely annihilated. Broke support levels. So avoid General Electric. I think they just announced a reverse split. So much for that helping them. The semis. Yeah, we already did the semis. I think they're probably going to go up high. You still have a chip shortage. Are they a buy here? I'd be okay with scratching the itch. Choose the automated trend line, see if they help. On the SOXL, you have resistance up at around $37 per share. Just be aware of that. Where do we close? $34.70. So you do have some resistance above. Ideally, you get a lower high, and then you open up your position, put a stop right below this prior low, and then if you break out, then you look to add more to that trade. Now, the weekly chart, which we went over earlier, looks really, really good. But we can bounce around in this trading range for a while. So I'd have no problem with opening up a small position right now, but wait for the higher low, wait for a pullback. Ideally, we retest the support level or at least come in the neighborhood of it this week or next week. We'll keep some sensitivity. It doesn't have to be exact. Okay. That's SOXL. I have to do TQQQ. This is the Ultra Pro QQQs. I like the setup. I like the fact that we're back above 87 bucks a share. We got to hold it. I'm still worried about this rise in yields, what havoc it may wreak on technology. So just be careful. Be aware of the fact that the yields are at that point where if they move up quickly, technology is going to take it on the chin. By and large, the Qs are mostly tech stocks and highly susceptible to rising interest rates. Amerimigo. Hey, buddy. Happy late Thursday to you, too. Daily chart. It looks good. rising RSI. And we have broken out. Looks good. Just stay small right now. What else do we have? Nah, I never have. Hey, Jerry. How you doing, pal? The best realtor in Texas just joined us. Jerry, why don't you share your Facebook link? We have a few Texans on here. Big Bears won down in San Antonio. What else do we have? A lot of these we already went over the requests. CRSP. Looks very, very good. Very nice chart. I think this could be bought. Assuming we hold 127. Looks really, really good. Daily chart. Very nice. I like it. CRISPR, thumbs up. Let's see if anybody popped in. Any requests? OKE for Nestor. He slipped one in late on me, but I got it. OKE. The monthly chart looks good, but we ran into resistance. Right at this volume shelf. And the automated trend lines are picking up this resistance level right on top of the volume shelf. No great shock there. Let's go to a weekly chart. Before we leave the monthly chart, the moving averages are beginning to rise. And that's going to act as a rising floor for the shares. Weekly chart, again, we have resistance here. Reversal bar today after trying to, in fact, we broke out yesterday. We broke out yesterday above resistance. Today, we failed to hold it. So that's a bull trap. You may get a pullback here on OKE. Longer term, it still looks good. But this may give you an opportunity. If you're looking to buy the shares on a pullback, you're probably going to be presented with that pullback fairly soon. So longer term looking good. Short term, I'm a little bit bearish on it. Oh, you guys are friends? Big Bear and Jerry. Okay. You're welcome, Jerry. GLW? Okay. Very nice. Let's take the automated trend lines off. Very, very nice breakout here. The only concern I have is when you throw the automated trend lines back on, you have some resistance above it. That's okay. It'll just act as a rising ceiling on the shares. We closed out the day at resistance. We've broken out. I like it. So what I'd be looking for is a bounce off of support. If we retrace next week, I think we may get it because we're right at resistance. Daily chart. Very nice breakout today. I think we're going higher. Very nice. Good call. Okay, I just want to circle back to see what bonds are doing. All right, so they're catching a bid. We went over this chart earlier when we first started out. I was concerned about the sell-off that we had seen here. We had broken support. Now it appears we're reversing off of support, and that should bode well for equities. See how the small caps are responding? My screen just froze. There you go. Wow, they're coming in a little bit. So let's see what the NASDAQ 100 is doing. They're not feeling the love either. Odd. You would think that the bid on bonds would help tech, and it's not. Why? The dollar recaptured support. Not quite sure. I think tomorrow is going to be interesting. Oh, McCarter, thank you very much, sir. Thank you very, very much. JP Morgan says GE is worth no more than 5. Wow, did they say that? Wow. Good info, man. Because they got crushed today. Let's go to the news here. Devastated. And they had an analyst day as well. Wow. That's something else. All right, folks. Hey, listen, I want to thank you very, very much for joining in. Another great Thursday night. Remember, one trading day left to go. If you want TrendSpider, please sign up. 35% discount code below. Free to members that join up our silver and gold level memberships. Members, we will go over the weekly closing price action, watch stocks, and review our portfolio on Saturday morning. And until then, everybody have a profitable trading day tomorrow and have a great weekend. Enjoy the weather, especially in the Northeast, which has gotten really nice. Take care, folks. Thanks for joining in. Bye-bye.